Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hello Canadian MJ friends, we're going to look at a bunch of names here and then we're going to look at USMJ names in the video tomorrow as usual. So we'll start it off with the big five and then we're going to look at HEXO, TRST, and OGI as some of the tier 2 names, Tgod and VFF and Pcielo. We'll start on the weekly time frames now that the weekly chart or the weekly candle has closed, and then we'll zoom into the daily chart. So obviously at this point, CGC, bulls in full control. We got another upgrade. So pretty much on this move the last 3 weeks, you got an upgrade from Piper to $40. News of expansion into New York for industrial hemp, and then an upgrade. Piper said, hey, $40 went well, let's jack it up to $60, and obviously a bullish response to that today to end the week on a very strong note. Bull MACD cross on the weekly time frame here as well. All-time high is about 25% away from where we currently stand. In my opinion, we will need some healthy weekly consolidation before we make our way to that all-time high, but as long as the markets don't break the December lows, the odds are pretty good that we can see an all-time high in 2019 here in CGC. So next time we consolidate on the weekly chart, we could even pull back 20% from these levels and look to form a higher low and hold $40. That would still be extremely bullish on this weekly time frame. So just keeping perspective, which with the size of the move that we've seen here, which is a 93% move in 5 weeks, we know consolidation is coming sooner rather than later. We just look at odds. We look at what is most likely to happen. Looks like I've got some APHA shares filling. Grab some at the end of the day on that weakness. Looking for a little end of the day bounce and strong close in CGC. Didn't end up being as strong as I was looking for, but just locking in some of that small profit to not swing over the weekend. Anyways, so for CGC, again, risk to reward. What is the most likely scenario from where we currently stand? Are we more likely to head up to $60 first, or are we more likely to head down towards $40 first? And let's actually make that even. Are we more likely to head to 56 or down to 40? And the answer is bulls are still in full control, but we are definitely very extended. The S&P 500 has not seen any sign of consolidation. It's kept a daily uptrend this entire bounce as well. That certainly helped all bulls in this market maintain their strength. And we look at the hourly time frame on CGC, and we had some end of the day consolidation. We didn't close extremely strong at the high of the day, which we normally see when we look for a gap up open. So we might not see a gap up open on Monday, but the first key levels that we're going to be watching first thing on Monday are 49 resistance and 47.80 support. If we break 47.80, we still have to pull back and find an hourly higher low, and we'll look somewhere in the $46 to $47 range. And if we see a bull break of 49, that will be an hourly bull flag being confirmed, and we'll look up to $50 psychological. There's pretty limited daily resistance here. As soon as we got over 46.70, we had really no resistance until the low 50s from there. Just like when we cleared 35.18, we had very limited resistance, and the bulls easily worked their way through those levels. So bottom line is bulls are absolutely still in full control. The overall market has some significant earnings reports coming for the tech sector, Amazon, Apple, Google, all these names still have to report. We're going to be watching pretty much at this point. The S&P 500 is going to maintain strength unless we see bearish reactions to the tech sector earnings that are approaching. So we're going to look for the CGC bulls to mirror the S&P 500 to a certain degree. Obviously, the news has made things more bullish, but if we're just going to compare these daily charts, did that wrong. So this is SPY on the daily chart, and let's do it the other way around. We'll put SPY in the background, and we'll put CGC in the foreground. So this is SPY and CGC. They both hit their low at the same day, on the same day. So a brief consolidation, continuation. Even the last 3 days, like I said, little bull flags for both of them. SPY has not seen continuation just yet. We double topped there. Obviously, CGC with the more bullish action due to the news. So again, look at the correlation. Obviously, the correlation is very significant. It's not tick for tick. It does change, but generally speaking, we can say that the sentiment for the S&P 500 has a very significant impact on the sentiment for CGC. So until we see a loss of the daily uptrend on SPY, and I'm going to do that SPY video here in just a bit, but until we lose that uptrend, we don't really have anything to worry about for the bulls. And right now on CGC, as long as we hold 42.54, we have another daily higher low. So we can pretty much say next consolidation that we see on the daily time frame is likely to maintain the higher low pattern unless we see a very significant 15% pullback without establishing a support. So we're going to anticipate the daily uptrend to hold on through the next period of consolidation, which will probably be at some point next week. Cron on the daily time frame, or the weekly first, increasing bull volume, great sign. Blue sky breakout is ideal as well. Last weekly higher low was 956, so we can very confidently say that we're going to form a weekly higher low the next time we consolidate here, and we're going to look for weekly consolidation when we lose daily uptrends. And we have not lost the daily uptrend at this point since we shifted this momentum, and we are looking at higher lows and higher highs. So we have a higher low at 1275, another one here at 1409, and we did see a new all-time high today. Not a very strong candlestick overall, but extremely comfortable for the bulls. And at this point, we closed at $16. We can consolidate 10% and still maintain the daily higher low pattern. The hourly time frame, we had some consolidation at the end of the day as well, similar to CGC. And I'm looking at supports of 1576 and 1564. So a couple little higher lows for the bulls to maintain. It's actually a 15-minute equilibrium if we want to zoom in. So I would be watching on Monday our high and low, lower high, higher low, double top essentially with a lower high, and an end of the day higher low. So the range is 1576 support to 1620 resistance. 1617 is the first resistance level, but when there's two levels that close to each other, I will default to the higher of the two. Because if we were to break 1617 and reject from 1619, it would still be a clear rejection from resistance. So we want to ensure that we get the break of the higher of the two levels when they're that close. So that's the 15-minute type pattern I'll be watching on Cron. Again, daily consolidation for either of these names. We can anticipate higher lows are likely to form initially unless we just see the S&P 500 collapse, which is not likely with how we're currently seeing the trading action go. APHA on the weekly. Bounce obviously does not even compare to the strength we're seeing on the other two names. It's been a nice bounce from the low, but we're just trying to make our way back to where we were before the short attack. So we have a weekly significant bounce. The last higher low was 616. Anything above 616 will keep the weekly uptrend intact. We're not going to look for consolidation unless we lose the daily uptrend. And we have a new higher low at 907. 907 is the most important short-term support level. We have resistance up at 1006. And we pulled back, established support, saw a bull attempt today, but didn't get a whole lot of follow through. So we were watching the tight hourly pattern into today, looking for a shift in this momentum. We got the bull break to start the morning. We set a higher low and saw continuation. At the end of the day, there was a big spike on bull volume on the 5-minute time frame, but it didn't get much follow through, and it gave that move almost entirely back. It looked like the bulls were going to close strong. They burned out a little bit early. This move occurred right before 3 p.m. Eastern, and then the entirety of power hour was just consolidation. So we're looking at a tightening range. Here it is on the 4-hour chart. High, low of the pullback, potentially a lower high being set. 907 key support. If we lose 907, we lose the daily uptrend, and we then set our sights back down to 828, and weekly consolidation will be underway if we lose 907 support. ACB on the weekly chart. So we did have some consolidation with the bearish reaction to the dilution news, potential dilution news. So we're almost a step ahead of everybody else, already starting weekly consolidation. Anything above 621 is a higher low on the weekly, so bulls are very comfortable with that amount of space to work with. The daily chart has not lost the uptrend yet. We saw a huge daily bull move. We pulled all the way back and established a key short-term support at 817, and now we're looking for that lower high to form. Bulls are hoping that that lower high has not already formed at 915. If it has, then we're looking at, let's see, that's about a 12% bounce. Always want to look at the range on how much we pulled back and how much we bounced since then. So essentially $10, and we pulled back $1.80, we'll call it. And the bulls want to see a 90-cent bounce to get halfway. And that's actually where we got. We did see more than a 50% bounce. And that's my way of doing Fibonacci retracements, where people would otherwise draw Fibonacci lines. It's kind of something that I do on the fly in my head, not to exact levels, but we're essentially doing the same thing. So what we're looking at is that potentially being our lower high. Daily lower highs are set when we lose the hourly uptrend. Have we lost the hourly uptrend? Not yet. We are looking for a higher low. We didn't establish an hourly higher low at any point on this bull move from 817. This is now hourly consolidation to try and establish that higher low. So if we were to start tomorrow or start Monday morning with a bull move up and a rejection from $9, and then we fade back down and break 882, that would lose the hourly uptrend, telling us the daily consolidation back down towards 817 is coming. So at this point, it's a tightening daily range. It does look like that lower high is potentially set because we had a weak follow through day today, and the must hold level for the daily uptrend to remain intact is 817. If we lose the daily uptrend, we zoom out to the weekly and look for more significant weekly consolidation to try and form that higher low. TLRY weekly time frame, certainly the weakest out of all 5 of these major names. Clear downtrend still intact. Anything under 120 was just a lower high. We topped out at 106, and now the bulls are just trying to cling on to support here. 64.06 is the must hold weekly level, and to change the weekly trend, we have to hold 64 and then turn around and break 106. So we still have a lot of ways to go for the bulls. They need a 30% move to change the weekly trend, and here on the daily chart, we can see it's still a potential bear flag. This is still a weak bounce. We did not even get 2 green days in a row on this bounce, same as ACB. Didn't get 2 green days in a row, so the bulls have to be skeptical. The bears had a ton of momentum. This is a weak bounce, and if we lose the hourly uptrend on TLRY, key support right now, 73.86. If we lose that little level, the odds of a daily bear flag are going to increase significantly. So not much to say in terms of bullish confidence in TLRY and ACB in the short term. ACB is certainly a little bit more bullish than TLRY overall. If I had to rank everybody on their daily time frames, this is pretty much how I would rank the main 5. CGC number 1, Cron number 2, and Cron is at blue sky breakout, but obviously a weaker day today than what CGC saw. So I'd rank these 5 in that order. HEXO on the weekly time frame is a bearish reversal candlestick. When I see a bearish reversal candlestick, the first thing I want to look to is, are we still maintaining the daily uptrend? So I zoom in for more details, and the answer is yes. Anything above 601 is a higher low, and bulls are trying to form their higher low in response to the bearish reaction to that dilution, potential dilution news that we got. 4 days of consolidation right now. ACB on its dilution news consolidated 5 days. So that's a potential little clue to be watching. We need to see a shift in momentum on the hourly time frame to indicate the daily higher low has been established. Anything under 688, just a lower high, and we just topped out at 685. Now the bulls need to pull back, hold 651, and then break 685 and 688 in order to change the hourly trend and give us our clear daily higher low. Because of the size of the pullback at this point from 760, we're going to anticipate that when we do bounce, we're going to form a lower high. Same thing that we just did for ACB. We're going to look for a lower high to form because it's a significant pullback, and the odds of seeing just a straight continuation move after that much selling pressure and that much volume is not the most likely scenario. The most likely scenario is that lower high forming. So step number 1 is change that hourly trend for the bulls. Then we say our higher low is set on the daily. And then step number 2, how much bounce can we get before we set that likely daily lower high? TRST weekly time frame just fine for the bulls overall. No significant profit taking. Daily chart higher low clearly established at 855. So let's see what that hourly trend change looked like. And this is one of those names where not all trend changes are crystal clear and perfect. We got a perfect one on Tgod. We got perfect ones on some of these other names, but we do not have a perfect trend change on TRST. And what I mean by that is we hit our low of consolidation, and then it's just been a straight bounce since then. We don't really have any clear higher low and higher high that we can point to say, there's where your trend change occurred. So this one required a little bit more aggressive action to be able to get in, either entering on a resistance break or bottom fishing that 855 low at that point. So we still have an hourly uptrend. When we lose the hourly uptrend, we'll look for a daily lower high to be set. Pull back here from 956 wasn't too significant, a little over 10%. It is possible to see continuation from this consolidation. But like I said, if we lose the hourly uptrend, which at this point we're not close to doing, it's still healthy hourly consolidation. But if we lost that hourly uptrend, we would have a tightening range. We'd see a daily lower high set and a tightening range into the end of the month. So all about that hourly time frame to see if the bulls can keep up this shift in momentum and keep the daily uptrend going as it has been doing for the last month. OGI. Weekly consolidation has already started. Bearish candlestick last week, a little bit of a hanging man, and now pulling back And speaking of which, identifying individual candlesticks, we've got a course coming out probably in a few days, and I'll certainly let you know when that's the case, but it's more of a basic going over all of the individual candlesticks and 2 candlestick reversal patterns, 3 candlestick reversal patterns, the psychology behind them, and a pretty in-depth look at all of that information as a base understanding of what individual candlesticks and patterns are telling us. I'll give you more info on that later, but we're consolidating on the weekly time frame. The daily chart here, I would say that we have lost this uptrend. And again, it's one here that's not crystal clear perfect. We had the top at 656. We pulled back. We really just traded sideways, formed a low here at 614. And then because the bulls attempted to see continuation and failed, we rejected by resistance by 7 cents and then pulled back. I call that a loss of the daily uptrend. We established a higher low at 614. Bulls tried to see continuation. They failed. And now we pull back with big bear volume. I do believe that the bear volume today is in response to a lawsuit against the company. I don't know the specific details about that. Look that up if you're interested. But we are seeing daily consolidation underway, a close near the low of the day, fairly weak close, loss of the daily uptrend. So that's when we zoom out to the weekly and look for weekly consolidation. The bulls have a lot of space to work with due to the size of the bounce. So we're certainly going to anticipate a weekly higher low is going to form. And the size of the pullback is going to tell us a lot once we do get weekly consolidation on all these names. And it is coming on all these names at some point. It's just been certainly delayed for a longer time than anticipated the last couple weeks. But when it does come, so let's just use this as an example. If OGI were to form its weekly higher low right now, that's a potential bull flag. We could see a turnaround and continuation. However, if we were to pull back under 550 and continue to see, significant pullback, that's when we look for the equilibrium scenario as being more likely. So that's why it's important to, gauge how much pullback have we seen. Do we form the higher low and then we would look for a bounce and a lower high and a tightening weekly range? Or is this higher low all we're going to see and the bulls quickly turn around for continuation? At this point, because of the bearish news, the bearish volume today, and the weak close, I would anticipate further pullback is coming on this weekly time frame, likely next week. Tgod weekly time frame, anything under, let's see, breaking 352 was a good start, but the key resistance on the weekly is 498. And why that's so important is because look at the lack of resistance after it. That's where we had the all-out dump. We saw a significant bounce of 100%, and then we pulled all the way back. So anything under 498 is just a lower high, and I would anticipate that being still 30% plus away from that level, we're likely going to need to consolidate and form a weekly higher low before the bulls are able to break that resistance. The daily time frame is all bull. This is a bearish reversal candlestick on the daily chart, a spinning top. So we have to be looking at the hourly now. Have we lost the hourly uptrend? The answer is no. Bulls are still just fine and in control. As we said in the video yesterday, as long as the bulls hold 340, they keep full control. We saw the gap up open, a quick push up, consolidated, but certainly still held that 340 level, didn't even come close there. And now our new hourly higher low is 357. So same story. If the bulls hold 357 on Monday, they keep full control. If we lose 357, we see the start of daily consolidation, and we're going to look to pull back and form a daily higher low because this bounce was so significant, as was the volume behind it. So daily uptrend is not in jeopardy on Tgod, but a little bit of indecision after such a big bull move over the last 5 days does have us looking for signs of daily consolidation coming, which again would be healthy. And on the weekly time frame, inside bar got a bull break today, still very low volume, and really just the same bounce following through. We just traded sideways for a lot longer than many individual names, but this was a perfect break, and it was similar to Tgod's break, I believe. Nope, different name. MedMen. It was similar to MedMen's break on the daily chart, but that's in the US video, which we'll look at tomorrow. But it was just an equilibrium. This is as easy as it can get in terms of having zero emotions involved in a trade. You just have levels. If we break 131, we're bearish. If we break 139, we're bullish. It's as simple as that. And you establish your trade game plan off that premise. So this morning, we saw an open at 138, and we broke resistance right away. So as soon as we break 139, that's your bull signal, and we went 10% today up to the high of the day from 139 with the volume follow through. Remember, we were saying that you're going to see a volume spike when the break is for real, and we surpassed, the volume the last couple days The average volume was roughly, we'll call it 1.1 million the last 5 trading days or so. And when did we see 1.1 million shares? And the answer is pretty much in the first 15 minutes of trading, we matched the volume of the previous days. That tells us that move is for real, and there's your follow through with really nice continuation. So the hourly chart is pulling back a little bit. If we can hold 147 first thing Monday, the bulls keep full control. If we lose 147, we need to pull back and establish an hourly higher low. And key resistance short term will be 154. And the next level on the daily, there's where that 154 level is coming from. But the next level on the daily after 154 is the top of this move, 167. Nice end of the week for the bulls. VFF weekly time frame, still in full control of the bulls. No sign of pullback. We broke a key lower high of resistance at 680. And on the daily chart, it's been nothing but bulls this entire move. Very significant follow through and just a clear hourly uptrend. You cannot get more clear than that. Every single consolidation period is giving you a higher low. And that is keeping bulls in the trade. Because we know that when we lose the hourly uptrend, we will see daily consolidation. So if we don't lose the hourly uptrend, we're not going to see daily consolidation. So the most recent consolidation low is 649. Anything above 649 keeps the higher lows intact. So bulls want to hold 649 on Monday. Resistance is 693 and $7, and bulls are in full control. If we pull back and bounce off 665 and then try and break to higher highs over 693 and fail, then we'll have the potential of a head and shoulders pattern to be watching for, with that being our left shoulder, that being our right shoulder. Let's say we pull back to 665, try and bounce, can't see continuation. That would be the head and shoulders hourly pattern, which would indicate a reversal if we break the uptrend, and that would indicate daily consolidation is coming. But again, it all depends on the hourly uptrend, because if we don't lose it, the bulls keep full control. And when we consolidate on the daily, with this volume and everything we've seen here, we're absolutely going to anticipate it's going to be healthy to form a higher low. Pcielo, only need the daily chart here as there's not much price history. Significant run up to the high, significant pullback down to the low, and now our higher low is clearly established at 679 with our strong close at the high of the day. This is another one on the hourly where we're looking for a trend change, and it wasn't a simple, easy signal. We had a nice, real tight signal here with multiple hourly inside bars. Let's look at that on the 5-minute time frame. It was just a choppy range with 719 resistance, a low of 679, 715 is a lower high, 695 is a higher low. So you could get an early signal. A break of 715 and 719 was a bull signal, and you can see that's really what the bulls responded to. But as far as an hourly trend change, it's one of those moves where it's not crystal clear. We just hit the low, sideways, tight range for a bit, and then a bull break, breaking the hourly lower highs. So at this point on the daily chart, same thing. The percentage pullback is so significant that the odds of continuation are not likely. The more likely scenario is a daily lower high and a continued tightening daily range into February. That's the case for ACB. That's the case for other names that we looked at that I'm forgetting right now. So let's do the rundown. Pcielo, bulls closing at the high of the day, very strong, but we are anticipating a daily lower high is going to form. Losing the hourly uptrend is the indication that that daily lower high has formed. Watch the 50% mark from the pullback to the bounce. If the high is 1150, we pulled back to 680, we'll call it. That is a $4.70 move. So 230 from there, we would be looking at 8, 9, 10. If we got to 9, 10, that's a 50% bounce back into this range. And again, scouting that lower high, if bulls can see increasing volume, that increases the odds that we could see more than a 50% retracement. If we see declining bull volume, that decreases the odds that we can make it up to 9, 10 and see that kind of retracement. VFF on the daily chart, all bulls. We're watching the hourly uptrend. When that is lost, we look for daily healthy consolidation. And bulls, equilibrium bull break with volume behind it. Hourly higher lows still intact. Bulls ideally want to hold 147 on Monday. Tgod, bearish reversal candlestick on the daily. Hourly time frame still intact for the bulls. Want to be a bit cautious because daily consolidation is due with the very significant move that we've seen over the last 5 days. OGI, daily chart at a bad news response. Increased bear volume. Loss of the daily uptrend means weekly consolidation is underway. TRST, Daily high or low established, likely to set a lower high compared to 956 unless we see some solid volume. This name has more chance of continuation than names like Pcielo or ACB do, and key daily high or low is 855 support. Hexo is looking for the daily high or low to be established. Definitely time to start paying attention Monday or Tuesday for that high or low to be established and the momentum to shift, just like we saw some of these other names do recently. ACB pulled back 5 days after its bearish dilution news, and another red day would be red day number 5. Lower wick showing bulls buying the dip today. Let's see if the bulls can follow through with that and break 688 on Monday. If we break 688, we'll say our daily high or low is established. TLRY, weak bounce, still a potential daily bear flag. ACB, also a weak follow-through day, not what the bulls were hoping for. We're scouting for that lower high to be set in the 50% retracement area. APHA, high or low on the daily established with the follow-through move today, and that's the key range. 907 support to 1006 resistance. Pretty much a 10% range to be watching for next week. Cron bulls got the all-time high, but not an extremely strong day. If we lose the hourly uptrend, we're going to look back on the daily chart, and the bulls will need to maintain 1409. CGC strong close, bulls in full control. Hourly uptrend very much intact. Bull flag attempt. Key short-term support 4780. Bulls ideally want to hold that on Monday. But if we lose the hourly uptrend, we're just going to look for healthy daily consolidation. Risk to reward on weekly charts does not favor bulls. We've seen a very significant previous month of bullish action. If you are not in bullish positions in these names, in the majority of them, let's say, then you are looking for consolidation. There are still short-term bullish trades to be had, absolutely. But if you're looking weeks out, again, it's just what are the odds that we see multiple weeks of continuation from here as opposed to multiple weeks of healthy consolidation. It's going to be dependent on tech sector earnings and the overall market reaction, in my opinion. We'll see how it goes. Have a good weekend. Do some good things out there. And we'll see you for the MJ video tomorrow.